How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. Now, over this shortened holiday week, we had quite a lousy week, to be honest with you, and all three composites were actually down. The Dow falling by 0.8%, S&P by 2.1%, and the NASDAQ by 2.6%. Now, my personal account by no means was an exception to the rule, and while it didn't fall by much, it did still in fact fall by $115.50, where my account now sits at $89,103.83 on the day, and ultimately bring me into today's video, in which I just want to talk about 5 high-quality dividend stocks that we can get invested into right now as they are undervalued, because we are still facing, believe it or not, the big three: a war between Russia and Ukraine, inflation, and of course the disease, which is the pandemic. So a video you're not going to want to miss out on. Watch it through and through, and before we get going, tap on that thumbs up button and help me grow this channel and get the word out there. Most importantly is actually subscribing to the channel by making your way over to doing so. I'd certainly love having each and every one of you on this journey with me. Now YouTube, let's go ahead and jump right in. So what goes up must come down. Now, I mentioned this not too long ago that we would inevitably reach another point of volatility. That point is happening now, in which here we are with the stock market and all indexes essentially on a downward spiral. I contribute all of this volatility to essentially the big three, which in my opinion remains war between Russia and Ukraine.
In southeastern Ukraine, Russian forces are moving into position. Russia says it's targeting newly arrived Ukrainian air defense systems. And in Mariupol, where the mayor said today 10,000 civilians have been killed, Russia's deploying recently recruited conscripts.
Inflation, how the Federal Reserve is going to be combating inflation.
So, why is everybody upset about the economy? It's this number, 7.9%. When Biden took office, the inflation rate was sitting at 1.4%. But as we've been digging out from COVID, all this money thrown into the economy, we see what the inflation rate is doing. The question is it going to stop going up?
And of course, the disease that is out there, it is lurking amongst us yet again. That is the pandemic that is not yet over.
Cases and hospitalizations rising in some parts of the country, and 2 new Omicron subvariants spreading. The FDA has just authorized the first COVID breathalyzer test for emergency use.
No, God! No, God, please, no! 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 No!
Now, ultimately, during all of these periods of volatility, I personally like to use them as a long-term value investor, as an opportunity that I embrace to literally find high-quality companies, kick back, relax, investing into those companies, and just collecting on the dividends. That brings me right into today's video, in which I want to get down to the 5 high-quality dividend stocks of the week that I'm going to be taking a look at. The very first stock I want to talk about is Dover Corporation, ticker symbol DOV. Dover Corporation is a diversified manufacturer of various components, consumable supplies, aftermarket parts, as well as software across industry verticals. The Dover Corporation was founded back in 1955 and has since then proven to be a very stable, reliable company to invest in. Their market cap currently sits at $21.1 billion. More recently, Dover Corporation announced 2 acquisitions, one of which was for Acme Cryogenics and the other Engineered Controls International, both dealing within clean fuels and clean energy, which is ultimately the future, which gives me a lot of confidence that Dover Corporation is literally just going to continue to grow, as this is the direction that we are heading in. Ultimately, Dover Corporation is down from their 52-week high, where it was sitting around $182, now trading for around $146. That's about a 19.7% change, and with their PE ratio currently hovering around 18.92, I would say this is quite a steal to pick up Dover Corporation, especially as analysts are looking ahead and seeing Dover Corporation make quite a comeback, coming back up to a median stock share price of $190 and a high stock share price at $216 per share. But as we're here for Dover Corporation's dividend, they've been shelling it out for 66 consecutive years, increasing it year over year, making Dover Corporation a dividend king with a current dividend yield of 1.34%. Now, moving right along to stock number 2, I want to talk about the Walden family's biggest competition, that is Target, ticker symbol TGT. Now, I know I don't need to go far too into detail about Target, as it's one of America's largest box department store chains, and as of right now, it is actually America's 8th largest retailer. Originally founded back in 1962, they've sure done a standout job in terms of building an empire with just under 2,000 department stores across the United States and partnering with Apple and Starbucks. I mean, we are talking about a quality company here. Their current market cap is sitting around $109.69 billion. However, during this high inflationary period, with Target being a little pricier than some of their competitors out there like Walmart, we are seeing Target take a bit of a hit here as it fell from $268 a share. That was its 52-week high, now down to around $237 a share. That is about an 11.5% change. Their current PE ratio is hovering around 16.83, and with Target coming out to share with all of us that they're going to be doing whatever they can to protect their prices and ensure that their consumers get the lowest possible prices. Let's just be honest here, Target being Target, it's not going to be disappearing anytime soon, giving me a lot of confidence to invest in Target for the long term. And analysts also seeing a comeback here with the median stock share price coming back up to $280 a share and a high stock share price priced at $365 a share. It's currently shelling out a dividend with a dividend yield of 1.54%, and they've been doing so for 50 consecutive years, increasing it year over year. And moving right along to our third stock opportunity of the day here, I want to talk about VF Corporation. That's ticker symbol VFC. Now, VF Corporation is an American global apparel and footwear company. It was founded back in 1899 and has been outfitting consumers around the world with its diverse portfolio of iconic outdoor activity-based lifestyle brands, from Vans, the North Face, JanSport to Timberland, Supreme, and more. Their current market cap is sitting at $26.86 billion, and amidst all of the market conditions here, they too are facing some storm-like weather. Coming down from their 52-week highs, their stock fell from $90 per share down to around $56 per share. It's roughly a 38% change. Now, with their current PE ratio sitting at 15.84, having full confidence in humanity to solve the supply chain disruption issues, I'm hopeful that we're going to make a comeback. So too are analysts, coming in at a median stock share price at $69.70 and a high stock share price at $97 per share. Now, what is more is that dividend of VF Corporations with a current dividend yield sitting at 3.58%. And again, another dividend king here in terms of reliability with 50 consecutive years with the dividend payments and increases along the way. Now, while on the topic of the supply chain disruption and logistics, let's talk about Expeditors International, ticker symbol EXPD. Now, Expeditors International is a global logistics and freight forwarding company that has been providing logistics solutions for over 40 years now. Whether it's order management when products are actually purchased, supply chain orientation, or digital logistic insights, Expeditors International has done an outstanding job in becoming a powerhouse in the industry with a very reputable name. They've actually grown into a market capitalization now of $16.19 billion. And while they certainly haven't had an easy last couple of years, it's reflected in its stock share price when it was sitting at its 52-week high around $137, where it now sits at around $96 per share, roughly a 30% change. It's a ripe opportunity for all of us, and with an eventual resolve on all these supply chain disruption issues, we can certainly expect that Expeditors International is going to be a rock-solid investment to make, with their current PE ratio sitting at 11.7. Now, analysts also believe that Expeditors International will in fact make that rebound, coming back up to a median stock share price sitting at $110 per share, a high stock share price at $125 per share. Now, while not a dividend king, it is a dividend aristocrat with 28 consecutive years worth of payments and increases, and a current dividend yield coming in at 1.19%. And last but not least, I want to go ahead and talk about a company that prides itself on serving customers and companies of all sizes, and this company is Chubb, ticker symbol CB. Yeah, maybe they could have come up with a better name, but get it together, because this company is actually the world's largest publicly traded property and casualty insurance company. They were founded back in 1985, and they have since been able to deliver through on a track record worth of growth and reliability, with a current market capitalization sitting just above $89 billion. But check this out, as of right now, they are down off their 52-week high as they fell from around $218 per share down to around $210 a share, creating a 3.6% change. And I know what you're thinking, that's not the biggest change in the world. However, their current PE ratio is sitting at 10.93, and analysts are only foreseeing that their stock share price is going to soar, coming up to a median stock share price at $235 per share and a high stock share price at $248 per share. So growth is in sights. Now we're just going to kick back and collect on Chubb's dividend at 1.5%. Now they've been shelling that dividend out for 29 consecutive years, increasing it year over year. So another reliable, safe dividend investment to make. Now YouTube, that is it between Dover Corporation, Target, VFC Corporation, Expeditors International, and Chubb. We are talking about 5 high quality dividend investments that are certainly undervalued that you should be watching this week. investing into perhaps for the long run. Keep in mind, I am not a financial advisor, so always just do your due diligence following my videos. However, certainly drop all those comments below and let me know your thoughts on these particular stocks. If you have them within your portfolio, if you're planning on investing into them. And of course, before we get going here, tap on that thumbs up button, help me grow this channel. If you haven't already subscribed, make your way over to doing so. I'd certainly love for each and every one of you to be on this journey with me. And until the next video, YouTube, I will see you all there.